nice equity rally today as well across the globe. If you do WM Go, you'll see it's just a sea of green.
Yes.
Can we trust this rise in global equities?
Vonnie, that's a great question, because what we're looking for at Voya is if this rally is going to be a broad-based rally or a failed rally. And it's a little bit too early to tell, but what we're looking for is very big, broad-based sub-industry group and industry group participation. The reason that we think about this is if we go back to the sell-off that we had in 2015 and into early 2016, markets fell. There was a big attempted rally late in the year, November into December, but it was a failed rally because it was not on very broad participation. That was a clue that you were going to indeed go down to a retest of the lows, which it did in February of 2016. So that's one of the things that we're looking for. Because of the violence of the sell-off, it's very important to see that you're getting that broad-based participation and broad-based breadth. So our breadth gauges are very important to watch over the next week or two.
And what about correlation? Because we opened the show saying we were going to examine whether traditional correlation is back, 1-to-1. Is it? It seems like we may have recovered that correlation of old.
Well, you have to remember, correlations can wander through time, right? We take a look at correlations on about a one-year basis between stocks to bonds. As big asset allocators, you want to make sure that that correlation does not break down. It tends to break down under periods of prolonged stress, so periods like 2000, like 2007. When you start to see that correlation break down in those types of longer term basis on a rolling one-year basis, that's a bigger warning sign. We don't see it now, but I think the big key takeaway for us in what our message is from correlations is we're at the point in the economic cycle where the returns tend to flatten out a bit for equities and they are more volatile. We likely have seen the lows of volatility for this cycle. It doesn't mean that that equities still can't outpace bonds, which seems like an easy thing with rates continuing to back up. But even as rates begin to level off, the fundamentals for equities are still very much there.